Time for Hot Picks. Our guest covers the energy sector. He's got 3 ideas in pipelines. We are joined by Aaron MacNeil, Director of Equity Research at TD Cowen. Aaron, thanks very much indeed for joining us. Let's jump in and start off with your first idea. Pembina Pipeline, a yield of about 5.5%.
Yeah, so Pembina is our best idea in Canadian midstream. This is admittedly simplistic view, but it's basically the catcher's mitt for natural gas liquids in the Montney play in Canada, which is one of the most prolific natural gas liquids plays in North America. That play is set to benefit with LNG Canada coming on in the coming months. Pembina is also advancing its own LNG project, the Cedar LNG project, which is actually a majority Indigenous-owned project with the Haisla Nation and is groundbreaking in that regard, arguably the best way to pursue major infrastructure in Canada going forward. You mentioned the dividend yield, attractive at 5.5%. It also has a base of contracted and recurring cash flows. 86% is take-or-pay or fee-based. It's got a great capital structure, arguably one of the best balance sheets in Canadian midstream. It strictly adheres to its financial guardrails. It's one of the most vertically integrated platforms, as I mentioned, on the natural gas liquids side. And to that effect, with the first quarter, they recently announced a contract win with a major Montney producer that locked up existing barrels as well as, extends to growth for that producer as well. So checks the box on a lot of different factors for investors. And bringing it back to valuation, it's actually the only company in Canadian midstream that trades below its historical 10-year EV/EBITDA valuation means. So, again, it checks a lot of boxes for investors.
Here's a stock that trades at a slightly higher dividend yield, 6%, Enbridge. What's the attraction there?
Yeah, so Enbridge, 98% of cash flows are contracted either through long-term take-or-pay contracts or cost of service agreements. So extremely stable cash flow profile in the context of current macro instability, and it gives you visibility to growth to the end of the decade. They have $28 billion of secured capital projects currently in the pipeline, and they outlined an additional $50 billion of projects at their recent Investor Day. You mentioned the 6% dividend yield. It's got a 30-year history of consecutive increases, which is pretty impressive. And that 6% among large cap S&P dividend aristocrats would be quite attractive on a relative basis. So Enbridge gives you that defensiveness. It gives you that growth. It trades in line with its historical valuation, but given all the growth and given positive funds flow that's chasing defensive names and names with clearly articulated growth, I think that's pretty compelling in the current market environment.
And finally, TC Energy, slightly lower yield, just below 5%. You like the look of this one as well?
Yeah, that's right. A lot of similar characteristics to Enbridge. It's got a 24-year history of increasing the dividend. As you mentioned, slightly lower, I think 4.9%. It's 97% contracted either through long-term take-or-pays or cost of service agreements. The key thing with TC Energy is it's a natural gas and nuclear power pure play. 90% natural gas, 10% nuclear power. There's a lot of growth thematics in those verticals. LNG exports, you've got power demand growth, data centers, and to that extent, they just announced with Q1 the Northwoods project, which was a nearly $1 billion US data center adjacent project with short cycle cash flows, an excellent build multiple between 5 and 7 times, regulatory light. So checked all the boxes from that perspective. And they actually said on the conference call that you can expect the cadence of new project awards to increase in the back half of this year and into next year. So again, from a catalyst perspective, it's pretty attractive. Because of that pure play nature, it does trade at a slight premium to its historical valuation. But again, I just think investors are putting their funds into safe, predictable cash flows with growth visibility to the end of the decade. And I think TC, Enbridge, Pembina, they're all going to be the beneficiaries of those funds flow going forward.
Aaron, thank you very much indeed for joining us.
You bet. Thanks for having me on.
Aaron MacNeil, Director of Equity Research at TD Cowen. Coming up,